Good morning, traders. It's Chris from the daxtrader.co.uk. It's the 3rd of August, and this is the Dax Technical Analysis summary. Just taking a quick look on the economic calendar. Be aware of the non-farm payrolls, trade balances, and the unemployment rate coming out from the US, but later on. And the European retail sales month on month is coming out a bit later on as well. So a couple of things to be aware of. Keep an eye on the market, services, PMI as well. If you want to find the economic calendar from the website, just go on to thedaxtrader.co.uk, scroll down, and you've got the clickable resources down here that you can use. All right, moving into the charts. Before we get started, trading financial markets is risky. Please read the risk disclaimer in the description below on the YouTube video and accept that before you continue. All right. If you want a copy of all of these chart books, then I've put them up on the forum. So members, you can log in from the website or /account, and you'll be able to get access to these, and you can upload them and put them into Sierra Charts. If you need Sierra Charts, then just follow the links below to do that as well. All right, let's just do a quick summary then. So the premium video has already gone out. It's in the channels. So as a quick summary, we'll look at the following. So this is the daily profile. It's like a TPO, and yesterday's profile was pretty aggressive. It was a B profile. We're currently forming the O of a potential bob pattern, so we'll take a look and see how that works on Monday. But you'll notice from yesterday, this was the candle. It was a pretty aggressive start to the day. We formed the majority of our volume in the bottom half of this candle, but we recovered pretty well, and we actually closed outside of the value area yesterday. So we create this pin. So it's not as aggressively bearish as it perhaps was threatening during the day yesterday. So another way to look at that would be with the profiles. Let's just go and bring that up over here, and you'll see the close was here. There with the value area for yesterday. Point of control is down here at 534 on futures, so that's looking like a potential candidate if it gets there for a long, providing it holds. If we do break below the low of yesterday, then the trend defining level currently at 455 is under pressure. We've got a low volume area here, which price could well just go and take out on the move back up to the gap close from Wednesday, I think that was, the close of Wednesday at least. And there will be a target area at 732, which is the exposed POC up there. All right, currently on the 60-minute chart, this was the pattern that was shared by one of our members yesterday. It replaces the fork pattern that we had on there previously, and I wonder if I can actually just undo all of this and show what it used to be. I'm going to have to undo a few. There we go. So this was the previous one. So we tagged the median line. That was the expected area yesterday. I posted a message out in the premium channel to say we're probably likely to reach that zone. We did, and some, and now we're looking to react. So the question is, Alan Andrews, who created the pitchfork as we know it, was a stop and reverse trader. So he would have expected for price to reverse at this stage and continue moving higher, ultimately taking out the upper median line parallel and moving to a new high. So that's certainly one way of looking at things, although there's a lot to break through on the way. The alternative view is that actually we've got a pretty bearish breakout here through this center line on this ACR line set. We've had our action point up here. So we're now looking to see whether we get an opposite and equal reaction to the downside, which would break through this trend defining level on the way to the reaction line. So there are a couple of strategies. I'm not going to give you the specifics on there, but you can kind of work that out for yourself. All right, as far as levels are concerned, these are the levels for today. There's quite a few of them that are on there. So I will just bring them up. There we go. So our bullish and bearish breakout levels were just the highs and lows from yesterday, I believe, but the support resistance from the pivots will be 654 above and 540 below. The daily pivot level is actually 591. The R2, 392 and 800. They're pretty expanded now because of the aggressive range from yesterday. IB high currently 589, IB low 553, but I think that IB low is the IB high is currently under pressure right now and will form a higher level. No, correction. We've already formed the IB high, so we've actually taken that out. We're trading around 600 at the moment, so we have broken above the IB high. So we're into that low volume area from yesterday. And Excuse me. And I'll post a few more of those levels out onto the article. All right, as far as strategies are concerned, I'll ignore this one, and I'll ignore that one, and I'll just focus in on this one. This is the strategy we're using at the moment. I share this on the forum, and so I've taken off all of the indicators that combine, and these are the arrows that we had. So yesterday there were a couple of signals. On the FDAX, there was only the one, but that would not have worked out. But in the later part of the session, there were 4 there and another one here. So these would have been the opportunities to get long. And as you can see, it's done pretty well so far, more than making up for this one. So that's kind of the dominant signal at the moment. That's the strategy I'm going to be looking to use for today. If you want more information on that strategy and you are a member, you can find it all in the forum. If you're not a member, then contact me if you want more information on that. Otherwise, that is kind of what we're working with today. And really, just as a summary, we're in a particularly interesting spot right now, because if we continue to the upside, we're going to run straight into this underside of center line. That could provide some resistance. If we break through that, we're not out of the woods yet, because we've still got that point of control, the point of ignition and the gap up here that could provide us with a slap down. So yeah, we'll keep an eye on that developing ACR line set. It's Friday, there are NFP, there's all sorts of other stuff going on at the moment today, so just be aware of all of that. Of course, there's quite a lot going on in the Forex market at the moment. The trade war is still undergoing. There's escalating trade tensions between US and China, and China vowed to retaliate. And so, we're really not finished with this, which kind of supports the idea that, we could still be putting this 455 trend defining level under pressure on futures. So for now, I'm going to remain on the bullish side until those levels are taken out, but just be aware of some of those key levels we just highlighted a moment ago. All right, have a great trading day. We'll be back again on Monday, and yeah, take care.